Hey everybody, just want to talk quickly about what I was talking about, and I also want to talk about this real quick. Definitely playing the longs tight. The basic definition of downtrend is lower lows and lower highs. We now have 3 lower lows, 2 lower highs on the daily chart. While I agree with this, there are a couple things that I want to say on top of that. Market structure, determining trend based on market structure, you'll have a little bit better a better luck and more consistency determining bias when you use more than one pivot to determine your directional bias. So, man, I wish I could draw on this. Basically, like here would be like if you ignore everything ahead of this, this would be like our highest high at the time, and then price comes down and establishes a new lower low. Also, I tend to use closing prices, not wicks, because wicks are sort of emotional price action and not necessarily representative of like where price is actually like valued at. So the close of this green bar here would be like our highest structure, and price continues down and establishes a new low, like right here on this red bar. This would be the lowest low at the time. So the structure, like to establish, like to maintain a bullish trend or like a bullish directional bias, then we need to have a closing price higher than this high close. So price continues up and this bar closes higher, so we are maintaining a bullish trend because you have like kind of a lightning bolt. You have up, down, and up, and another close higher than that. So this bar broke previous market structure. So you maintained our bullish trend. Bullish trend comes up, sets a new high here, price comes down. And since price hasn't closed below this last lowest low, like we're still in a bullish trend. It'll have to break below that structure. Like this trend would have to continue down and break below here and close on a daily bar below that to be considered like a bearish trend. So we've come down here, set a new pivot, move back up. We closed above this, so we're maintaining that 1, 2, 3 sort of move. We're still in a bullish trend because we've broken higher market structure. Price comes back down, sets a new low that did not break the previous market structure. So we're still in a bullish trend. Comes up, closes above this market structure. So you continue that 1, 2, 3 move. And we have a new higher high. And this is our next lowest low, that if it breaks that, if it closes below this market structure, then that doesn't change the trend. It becomes a period of consolidation, like a bullish consolidation period. So when the price closed below here, to maintain a bullish trend, the price will need to close above this higher market structure. Since it didn't do that, and price is falling back down. As soon as there's a close below this low here, then you have a 1, 2, 3 bearish move. So then this is like, if we get a close below, I don't know what that is, probably around 50,000, or 48, no, not 48, 49,000 maybe. If there's a close below whatever this low bar is, if there's a close below that, then I would be operating with a bearish bias because the price will have broken the prior market structure. But until like right now we're in bullish consolidation, and it's probably just going to wiggle back around and forth in here, and until it breaks this highest market structure, like this highest prior market structure, then we're going to be like, once it breaks that and closes above it, then we'll be bullish again because you'll have 1, 2, and 3, and that's what you want to look for or that's one way to look at market structure to determine your directional bias. And let me get to what I was actually wanting to talk about here. Okay, what I really wanted to talk about, the falling knife here, catching the falling knife, and why I don't think we're in the bottom of this yet. When we have aggressive price movements to the downside or to the top side, I will look at divergence on the 15-minute chart to show me when price is hitting a local bottom. Divergence is when you have an oscillator moving in one direction and price moving in another direction. The way I measure it is look with a 60 bar look back. So you'll want to have a new 60 bar low and a not new 60 bar low on the oscillators. But as you can see here, price has been trending down, established a new 60 bar low, but it is also the lowest point on all the oscillators, so there's no divergence. The momentum in CCI, they're all moving in line with price, so there's not really any indication on the price action on these specific price action oscillators. And I use momentum, MACD, CCI, DPO, and then a blend. There's no indication on any of them that that there's a divergence in price. Like everything is measuring in line with the trend. So we're in a brief respite from the bleeding, but I don't think we're done yet. This has happened a couple times in the past. Here was one instance where there was no bullish divergence because like the next couple bars after the dip, all the oscillators were trending with price. So like the rally was like really short lived. It didn't bust up to new highs or anything like that, and then just fell out once we had bearish divergence trigger. There was another one back here. This was another one that this did trigger, and it went like this triggered bullish divergence here, and it gave us a longer sustained period before bearish divergence took over and killed the price. But since there's no bullish divergence, then I don't think the downtrend is done yet. And I still want to make trades on this. I don't want to just sit on the sidelines because an oscillator is just telling me that there's no like confirmation. I still want to do stuff. So if there's nothing on the on these particular oscillators, I'll look over at RSI. And the things that I look for on the RSI, generally, like you have the 30 line, the 70 line, and then the midline. Typically, if the RSI is sitting below the midline, then you're bearish. And typically, if you're above the midline, you're bullish. So since we have price trading below, like the RSI is trading below the 50, the midline, then we're bearish, and that's like not a great sign. And the two things that I would want to happen to flip and go back long, or to think that price will be going long, like I'd want to see a break of that trend line. Oh my God, I hate that I'm so bad at this. I'd want to see a break of that trend line. That would be the first indication that the price may be starting to rally a little bit. But at the same time, I'd play very cautiously to the long side because there's no bullish divergence on the other oscillators. So like price action is measuring like in line with price. So like I would treat all my longs very cautiously if the RSI breaks that trend line. Then once the RSI gets above the 50 line, then I'll like loosen up my stops a little bit and maybe take more aggressive trades. But even so, like if there's any sign of bearish divergence once price gets back up, then I'm out. Like I'll cut my trades. Another thing that you can kind of look for to sort of signal a temporary bottom if there's no bullish divergence is like say RSI, like we're right here. I don't know what measurement that is, but it's around 15 or so. If the RSI comes in and plots a weaker dip under the 30 line, like if it comes, like 25 or something like that, then that's also showing that like selling pressure isn't as strong. So another cross back above above the 30 line and breaking through this trend line again, there will be more bullish pressure, like for your trend. But using RSI for me is more subjective. Like it's not completely rules based. It's just kind of like an experiential sort of oscillator. But yeah, no, that's what I'd be looking for. So cautiously, I'd be operating to the long side if we break the trend line. I'd be less conservative if RSI breaks the 50, the midline. And yeah, if we get another dip back down, I'd just be watching the 15-minute chart for divergence on the momentum CCI or the blend. But yeah, so I think we'll be back down here again soon. Maybe only down to like 48.4, something like that. But yeah, I would look to be a buyer in like that range. That's pretty good value price right now. But again, also like be monitoring all the oscillators, because if they all keep trending down, then shit, don't buy, because it's probably gonna fall out the bottom. But yeah, good luck with everybody.